the market came down and it gave a bounce back. After reaching the zone, it gave a bounce back till 28,200. It is really a very good bounce back. This is the first time the market was giving a bounce back in the last week, because after that it was a very tiny bounce back. It is we can say it is just a retracement, but this is called a bounce back because the market 27,860, it gave a bounce back till 28,020, and it came down till 27,000 because it could sustain there. It came down again, the market showed some drops, and it came down till 27,920. From there you can see the market showed a terrible recovery. You can see it is a very high recovery without any single retracement. You can very well notice that from 27,920, that is 27,920, you can see without any pullback or without pull down or without any recovery, you can see the market straight away went till 28,920, and even the next day also it tested 28,980. So it went up till and tested this 29,000 on Saturday also. So it is a very steep recovery that the gold market has provided. So on seeing the price actions, what we can conclude is that on the first 3 days it was dominated by the sellers. On the first 3 days was dominated by the sellers. This is the reason why we always say at the beginning of every week we need to have a particular plan, and we should go with the plan. Once we get profit, we should book the profit and wait for an opportunity. All the days cannot be a winning day, because particularly in trading, whenever you get an opportunity, because the market stayed with the trend, and you should book the trend, and you should have utilized the opportunity, because it is not a single drop which happened. Because whenever the price is recovering, it is not all of a sudden it is not recovering, it is giving you a clear indication. It came down till 28,000 and 27,860 and went back, and again it gave an opportunity. So whenever in a trading, that you should make use of the opportunity whatever we are getting immediately, because once the opportunity is lost, then you should wait to gain another opportunity. Suddenly you cannot go and take another opportunity, you should wait for another opportunity. So the market has given another opportunity for buying in the later on Friday. So you can see the amount of buying which we had on later on 2 days, because it was a good buying, and you should make use of this opportunity also. So on seeing the entire price pattern, we can say that the gold, the first 3 days was dominated by the seller, and also finally the buyers gained some very good momentum, and the market broke all the resistance zone and stayed away and closed around 28,960. So this is the zone where the market closed at. So let us see what happened. Let us go and analyze the market underlying structures. So we know that the market underlying structures are open, high, low and close, and also support and resistance. These are the basic underlying market structures. From these structures the other technical tools was derived. So if we can clearly understand the basic underlying structures, we can avoid this type of drastic, we can avoid if you have any position here, we can avoid this type of losses. Let us go and analyze that. So on Monday 28,360 was the price opening, and always you can see this black color box indicates the opening and closing for the respective day, and this blue box indicates the low and high for the respective days. So on Monday the market opened around 28,360 and it came down till 28,160 and closed around 28,240. The next day opening is lower than the previous day's closing, so that provided some selling momentum, and it was created a new low. You can see this is the low that was created on Monday, and this is the low that was created, or 28,000 was created on the next day, that is on Tuesday. And the closing is also, you can see the closing is below the previous day opening, that is below the opening and the previous day's closing. So again the market the next day on Wednesday also the market opened bit lower, that also provided a good buying selling momentum, and it created a new low. Just from this low the market gave a bounce back. Let us see why that happened. So on 27,860, you please go back and see the charts. You can see very well notice the importance of 27,860. So you can particularly from this zone, once the market has given a very drastic recovery, So things happened, history repeats. So after this is the low that was created on that Wednesday. You can see that 27,860. After testing this low, the market went back and created a high. This is the point which we should note. The high which was created is just above the price opening. You can see the opening, it created a high which indicates that the market has gained some buying momentum, and it is above the previous that day's opening and closing. And also you can see this is the high which was created on the Tuesday's opening, is that 28,200 is the Tuesday opening, and also the low which was created on Monday was 28,180. So this particularly all the zone was recovered on Wednesday. After creating a low, the market gave a recovery, but it took the resistance around 28,200 and it went came down and closed around 27,960. And another point to note is that all these days you can see all the days the market opened lower. So but on particularly on Thursday the market just opened higher. You can see 28,000, around 28,000 the market opened higher, and all of a sudden you can see the market went up and tested this 28,200, which is at par and above all these zones highs and lows that was created for the past 2 days, right from Monday also, because right from Monday also it was staying and clearing that. And also so that is the reason the market gave some buying momentum and it pushed the market higher, and it closed around 28,520. The next day the market opened above this 28,600, which indicates that the market has cleared all the opening and closing zones and highs and lows. That clearly indicates a buying momentum, and that provided the buying momentum that caused the market to just push higher and closed near the high, weekly high of 29,000. This is the weekly high, and the market closed near that. So if we go back and again analyze the structures of high, low and open close, you can see just follow this black box. This black box always indicates the opening and closing. This market opened here and closed. The next day also you can see the opening and closing is just below that. On the next day also the opening and closing is just below that. And after that you can see on particularly you can see the market just broke all this opening and closing pattern. You can see if you draw a line of all the current opening and closing, you can see that it was in a dropping pattern. And if we see the low, you can see that the low was also decreasing for the first 2-3 days till Wednesday. The low was decreasing, and the high you can see if you see that the low is also decreasing. On Monday the low was around 28,160, and on Tuesday the low was around 28,000, and on Wednesday the low was around 28,860. But after that if you see that the market created a high, if you go and correlate all these low, if you that the market pattern was broken, because the next day the low is somewhere just the opening is only the low, and the low was increased, and the low has broken all this part. You can see that clearly the open high low position was closed, because it has got a closing just above 28,520, which is above all the weekly opening, closing and high low open position. That clearly indicates the market has gained some buying momentum. The another fact about support and resistance, let us go and watch the support and resistance, because this 28,260 provided a good resistance here. You can see this 28,260 provided resistance, and 28,200 is also providing some resistance for the gold market. But you can see every time the market because 28,220 to 28,200 was a crucial row, played a crucial role last week, because after testing the resistance the market showed some clear drop. Once the price broke this resistance, which is a high also for a particular day, that is on Wednesday, the market created high. After breaking this resistance, the market has gained some momentum. And also another major resistance was 28,420. This is also the another major weekly resistance. This resistance was also broken. That also indicates and pushed some buying momentum. The another major factor to notice which caused this buying momentum was that this moving average. So this is the long term, quite a long term moving average which we are following. So the closing is above the moving average, and the price has cleared all the major resistance zones of 28,420. Since the price has closed above the moving average, since the price is sustaining, and the next day if you see the price opened above the moving average, that also indicates and push the market higher. So these are the various reasons why the market went higher in gold markets, because it is not suddenly, even if you are missing this opportunity that was on because it is quite difficult to miss the book this make use of this opportunity that created on Thursday. But this is the opportunity. It is quite easy to pick this opportunity because there are so many reasons why we can go for a buying. It is staying above the average. The price closing, that is on Thursday closing, is well above all the trading zones that has happened on the previous session. That created a buying momentum, and this was a good opportunity that we should have made use of that. And today we are expecting gold to open more or less around 28,800 to 28,920, because based upon the INR values also the price opening can change. And today we are expecting gold to open around 28,920 to 28,820. So today, for this week we expect the gold to stay in uptrend till this 28,520 holds good, because we need to target till this zone 28,520, which will be supported by the average also. Because initially we can go for an average. We know that we can this is quite a big stop loss zone. You can see whenever you find because we have mentioned all the support zones. We have marked all the support zones: 28,920, 28,860. You can go for an average till 28,520, and you can place a stop loss around 28,500. Again, we are saying that whenever you go for an average like more than 300 points, try to book profit for the average lots at regular interval. That can help you minimize your loss and maximize your profit. And the expected target zones are initially 29,120. You can expect because this is a very good resistance, 29,160 and 29,120. This is a zone where we can expect in short term, but because it is a very good resistance also. If you go back and watch the price action that happened upon around 29,120 and 29,160, you can very well notice that it is a good resistance. Initially we can expect the market to test this resistance. If the trend continues, even the price can go till 29,220. So what we can expect for this week is that we are expecting gold to continue its downtrend, but please take care of all the major support and resistance. Trading in gold is always for clients who is having very good sufficient funds, because you may notice that the price action and the volatility is high. Once the volatility is high, your stop loss zone is also going to be high. Once the stop loss zone is all going to be high, the profit margins are high, and also the risk is also high. So whenever you are trying to trade in gold, have sufficient funds, more than sufficient funds, because that will help us to gain a huge profit also, and we can apply a lot of strategies in order to protect us when the price is crashing. So this is what we are expecting to happen in gold market today. Let us see what's going to happen during our trading session. Thank you, and thanks a lot for watching your video. Take care. Bye.